Hello, all. 5 Minute Trader here today. It's Expiration Friday. So it is, where are we at? November 15th, 2024. It's right around noon Eastern. I had a bunch of stuff this morning. So I didn't have a chance to look until now. But today, I kind of decided, it's a fairly new channel, but I decided that what I should do is try to carve out a little bit more time once a month on Expiration Fridays, which is today for November. I'm not, to be truly transparent, this is literally how much time I spend per day. The idea of this is that I don't have time, nor do I want to watch charts all day long. Anybody's welcome to do that. But I do want to try and beat the market with some strategies that can help me build a portfolio that allows me to have cash available to make moves when moves happen in the market. And I wanted to bring a little bit of transparency to the channel, which is something that, there's definitely channels out there that have transparency, but I don't see a lot of them. I feel like a lot of ones are making recommendations on, trades and pontificating about direction of stocks and things like that. If you're like me and all that stuff kind of stresses you out and you're just like, how can anybody predict the future? Then this is the place for you. So what I decided that I'll do is on Expiration Friday, I'll spend more like sort of 15, 20 minutes doing a quick recap of what happened in the month. So what I'm going to do here is I'm going to share the trades that I made this month. And I actually put them in a spreadsheet. I spent a few minutes last night creating this. And again, in this idea of full transparency, if you're a Hawkeye and you've been watching this channel, you'll probably notice that there are some trades I have. For example, I think I have a position in GDXJ right now, which is in the money. That was one I put on in a prior month, and I've kind of rolled it. So those aren't included in here, but they will be included as I go out. I mean, I am not lying when I say I don't have a ton of time per day to do this. So I wasn't going to sit and go back, even more than 1 month to see where I'm at. But in future, there are some trades in here that I didn't take off this month. In future, they'll be in here. So I've already sorted this by underlying. So the first thing I'm going to point out is this last column, profit column. So the total on there for these trades, this would be if I opened one contract of each trade, would have been down here at the bottom right, $962. That includes some of the losses that are in here. So roughly $1,000 if I'd open up one contract. Now, everybody's accounts are different. I trade in 3 different accounts. Actually, most of my trading is done in retirement accounts. I cover in this channel, I show the account that's my cash account. So not one that's in like a qualified or tax protected account or anything like that. But I sometimes I make the trades in that account. Sometimes I make them in other accounts, depending on how much capital I have available in these different accounts. But this encompasses all of the accounts and all the trading that I did for this last month. So to run down it, me first of all just make a point here that there are only 3 trades out of 16 that didn't go the way I wanted to. I mean, I don't usually do this kind of analysis. Like, I'm typically looking like, is my account value going up each day? That's what I'm looking for. And then I'll skim my positions and be like, are they all going up per day, or is there some red somewhere? And that's about it. As long as things are moving up, I'm happy. I typically don't go back and analyze this, but I feel pretty good that I put on 16 trades this month and 13 of them won. That feels pretty good. Now, the obvious point that someone could say in counter is, if they know about selling puts, is that like, okay, well, one sold put that goes heavily against you could wipe that out, right? Like, if I sold a put in UNG and the natural gas went out of business in 1 month, I'd lose about $1,100. That would wipe out that whole month's worth of gains, right? But that's not typically what happens. ETFs, particularly market ETFs, tend to work within their predicted range that their implied volatility dictates. And I've been doing this for almost 15 years, and it's very rare that I get assigned on ETFs. So this we'll find out, right, as I be a little more analytical over this in future months. But I think this is probably pretty typical. So let's take a look. I'll quickly go through the ones, and then I'll talk about the ones that are losing, that are going against me. And spoiler alert, I think they're mostly the metals. Oh, there's one in UNG that's going against me. So let's take a look by underlying. So EWZ, that was Brazil. I opened up one there at the beginning of November. That was a pretty short-term trade, right? So it's only about a 15-day expiration, which is why it's only $33. That one's going to expire today at $0. So I opened it at the 26.5 strike. I got Tasty Trade going on here in the background too. I won't actually switch to it in the share. But 26, oh, excuse me, that's EWZ. EWZ. And yeah, that's a 27.40. So 26.5 was well below its low for the last few years. So I was able to open a put like below its ultra low, and it worked out. So that was cool. Let me come back to GDX and GDXJ because those are both losing. So I'll come back to those in a minute. IWM, so I put those out in October. So there I was right around the 45-day zone. What's interesting about these as I kind of looked at them was that I closed one at $7. I closed one at $70. I didn't do enough analysis to see like, why did I close this one out at $70? Why didn't I let it ride? Most likely what it is, and I probably won't have time to do this, but if I do, I'll try to do it in future months, is to like, what might have happened with that one is I sold this put down at 205, and maybe the market turned around really quickly and just the price of the put went way down. So I was just like, you know what, I've made a decent amount of money over a few days. I'm just going to go ahead and close it out. That's typically what's happened when I see situations like that. But this other one, straight up, I sold the 215 strike and the 205. So if we look at IWM, I think IWM's had some down moves over the last few days, right? Yeah, IWM's actually been going down quite a bit over the last few days. But I was able to sell put 215 and 205, which is 205 is way below where it is currently. So that one worked out well. IYR, I think I was looking at that one just the other day. There I sold IYR, I was able to sell at the 97 strike. So IYR is the real estate. 97 is not that low, actually, now I look at it. So that one's kind of interesting. I'm surprised I opened that one. It must have been on that one a day where it was down, but it had been up recently. So that's actually not typically as low as I would sell. I like to sell like way below where it currently is. But it still worked out. So I made 100% profit on that. SLV is so cheap, like $27 for a put. That might be one that I can't remember how many contracts I opened. I'm typically trying to balance the amount of risk. So each trade I want to have roughly the same amount of risk as all the trades. So, if I can have 10 to 15 trades in my account of similar size at any given time, I'm not outweighing my risk. It's something to think about there in terms of like, when I say equivalent size, that doesn't necessarily mean that like I'll have an equivalent size SLV trade and a GDX and a GDXJ trade. I consider them to be the same risk because the metals are typically correlated with each other. So opening a position in GDX, GDXJ, or GLD is really equivalent risk-wise to opening one in SLV because they tend to move together. So if that's not something you've ever thought about before, just think about that when you're opening up trades in correlated underlyings. And there's a way you can tell in Tasty Trade what's correlated and what isn't. TLT, I opened at the 90 strike back in October. So 90, it's right around 90 right now. So it's actually been coming straight down, right? So that's an interesting one, right? Like that's a trade. I made 90 on the 21st of October. So on the 21st of October, it was at 94. I opened a trade at 90. It's right around 90 today. So in a lot of ways, I was wrong on the direction of TLT. but I still closed that one out for 100% win, or almost 100% win. I closed it out at $8 for almost 100% win on that one. So even though the underlying price went against my strategy, I still won. That's one of the things I like about puts. UNG, I think anybody who watches the channel knows that UNG has been my favorite this month. All but one of those went against me, and I closed them all. There was one weird one I noticed here that I opened up this put on the 7th in December for $71, and I closed it for some reason. I don't know why I did that. That might have honestly been a mistake. I might have messed up there. Still won on the trade, but I didn't win very much. And this one here at the 13 strike, where's UNG right now? UNG's at 13.20. So when I did this analysis last night, this was in the money, but it's actually not in the money right now. So it's kind of let's call it at the money. It's actually 89 cents right now, so I could update this to 89. So that would take it, it's basically flat. But remember, when you sell a put, all that happens is the underlying needs to stay where it is or go up. And it can come down a little bit based on how much you've collected. So this could, I opened this up for 85 cents. So it could technically go from down to $12.15 before I actually lose money on the trade. And even at that point, I'd be able to roll it. And then USO looked at quite a bit. These are all winning trades, right? So USO, my lowest there is my lowest. I was able to open at 139, but you look, I've opened it much higher here too. 68, 67, 68, and 69. I had USO open. It's currently at 70. So that's been doing great too. All right, let's look at our losers. Our losers are gold, like the metals, right? And I had a comment on one of my videos. It's like, why are you selling puts into the metals that are continuing to go down? And that's totally fine. I think if, you know, that is the price action you're seeing and you're not ready to look at a position there, more power to you. I'm not playing directional. I'm not playing short term. I'm playing midterm. They're typically 20 to 60 day is what I'm looking for as a number of days I want to be in a trade. GDX is against me, right? I've got multiple positions that are in the money. And I'm realizing here, for some reason, I don't have my calls on. I need to look that up, but I also opened 2 calls in GDXJ that are not on here for some reason. But I opened a call spread, which I'm going to make 100% on too. I need to add that in here. I'm not sure why that's there, not there. But I opened this put at 37 in GDX. GDX is currently at 35 and 60 cents. So it's below my, I could have gone down to 36 and 94 cents. So it's below my break even. What I was able to do is I was able to roll that out. That was oh, excuse me, that one's in December. So I haven't needed to roll that yet. Let me go back on that. This one, I'm just waiting to see what happened. It doesn't need to come up much for me to zero out on this, right? And in fact, if it comes up $1, I'm going to make money on this trade. So I'm not super stressed about it right now. And then I've got this other put in GDXJ. That's at 45. GDXJ is at 45.28 right now. I collected $1 on it, so it can go down to 44 before I lose money. So even in my losers, I'm not stressed out about them. I'm just going to sit and wait. And when the January expiration gets to about 45 days out, I'm going to look at them and say, am I still losing? Are they still in the money? And if they are, I'll go and see if I can roll them. And we'll cross that bridge when we come to it. We'll see what happens here in the next month. So that's where I'm at. I feel pretty good. This month I got, what did I say? 16 trades, of which 13 were winners. And of those 13, many of them I closed for almost 100% win. So I feel pretty good. Feel pretty good about that. Making money every day. That's what I'm trying to do. And let's take a look. Let's spend the last few minutes just taking a look at the market like we usually do. But, you know, hit me up in the comments, like what you think of this strategy. And if, I know it's just 1 month, but this is something I've been doing for a long time. So it's the first time I've started like recording it. All right, let's take a look at our ETFs. Oh, market's down. Ooh, I love it when the market's down. So market's down today. You know, what's interesting is the metals are down and the market is down. Although the metals are pretty flat, but they're down a little bit. Typically when the market goes down, the metals go up. That's one of the reasons that I like to trade metals, is that it gives me a way of like, market goes up, metals go down. So market goes up, I'm not going to sell puts in the market. I can sell puts in the metals. And then when the flip happens, I can sell puts in the market and close out my winning puts in the metals and just flip and change. And doing that 30 to 20 to 60 day zone allows me to always have money available, right? So so if we look at our big ones here, so UNG is up, that's going to help me. Emerging markets are flat, that's going to help me. The metals, I could use a little help, but like I just said in that analysis, I'm not too stressed about it. All right, let's take a look here. We've got the Q's down, quite a bit. USO is down again. Oh, I love this bounce back and forth action in USO. I think I opened a trade in USO yesterday though. Yeah, I did down here 68. Spiders are down. IWM is down. So, okay. And then we look at the implied volatility. IWM has the highest implied volatility. So let's do a little bit of math here. I know I'm going a little bit long on this one, but let's see where we're at. So if the Q's in December, 35 days, the 30 delta is, let's do this 28 delta. That's at, where is that? That's at 480. So that's here. It's below a recent low, but it's not like down here or anything like that. So I'd want to keep that in mind. $47,000 risk for, what is it? 534. So 534 divided by 47,467. It says opponent 0.1. Let's look at the spiders. Spiders are even more expensive. 30 delta here is at 572. Where's that? That's actually above a recent low, so I wouldn't feel super comfortable doing that trade. That is 513 divided by, it's going to be about the same, 56,686. It's a little bit less of a risk to reward ratio than using the Qs. Let's take a look at IWM. IWM at 35-day is, there's a 0.29 delta. That's at the 221. And it's not super low. I would prefer to be down here in this kind of 217 zone. What can I get for that? 217, that would get me 216 divided by 21,484. It is the highest, technically the highest risk to reward trade is IWM. So if I were going to put a trade in one of these, I would probably be doing IWM. I don't know if I'm going to do it though. It has been coming down quite a bit, but like I would feel a little bit more comfortable if it was down here a little bit more. So I'm probably not going to put that on, but if I were in a scenario where I'm like, oh, you know what? Markets are going to continue to go up. That could be a good trade. Let's take a look at, did I look at USO already? USO is the 30 delta is 67. Ooh, this is interesting. That's way down here. So that would be $136 divided by 64. Well, that's a 0.2. That could be an interesting trade. Now I'm going to say, I've said this before, I'm going to say it again. I have not found following like the media and things like that to be particularly useful for my trading style. So like we could easily make an argument here, right? Okay, Trump is coming in January. He wants to dramatically increase domestic oil production. That would bring the price of gas down, right? The price of oil down. So why would I take a position in oil, which is assuming the price is going to go up? Now, if you were to flip off one 24-hour news network and put another on, another might say, well, oil production in the US is at its highest and has been at its highest for a long time. And yet, gas prices are still high, or oil prices are still high. So like WTF, like that clearly doesn't mean anything. So how do you filter out that noise? And how I filter out that noise is number one, I'm not doing long-term trades. I'm not buying and holding USO thinking it's going to go up. So that's part of it, is that price action in these political ones are outside my time frame that I'm looking at. I'm just looking at like over the next few weeks. Is it going to stay roughly in the same zone or not? That's number one. And number two, I think like there's no way you can predict the future with such simplicity as people try to make it think on in the media. So I just don't buy into that a whole lot. I know that markets drift up over time. I know that the metals tend to move in an inverse direction than the equities. And I know that certain commodities like oil and gas, they tend to just kind of go up and down and look at range. I mean, we can literally see that happening with this chart from the last year, right? And if I go back the last 5 years, like here, it's been a while since we've had a real run up, right? So I'm not looking 5 years, I'm looking 30 days. So that's how I make my decisions. And then I try to pick strategies that if a trade goes against me price-wise, that there's ways for me to defend it against that. And selling options is, I have found to be the one that is the easiest to manage when things go against you. That's it. So, hey, I hope it's been okay to have a little bit longer of an episode. Thanks so much for watching the channel. Be sure to hit that thumbs up, give me a subscribe. And remember, if you want to sign up for Tasty Trade, it's free. You can hit my link in the description. That really helps out the channel. So appreciate it. Talk to you soon.